Okay, now we're going to talk now, we're nearly at the end here, about the no supply, test in a rising market, and something called no selling pressure. It's a down bar on volume lower than the previous two bars, and it shows lack of selling as the market falls. The background is important here. This is only an entry to the long side if you have strength, not weakness in the background. This is a higher probability entry to the long side when you have an uptrend in place. Do not enter this in a downtrend. Okay, no supply. NASDAQ. Okay, now I'm going to get to the point where I'm going to show you the trade that I took in New York. But here, very clear example again, widespread down, level bar, closes level. Market churns, it comes back down. These three bars here are key. There's lack of selling on each bars. Look, the bars close level, the volume declines. Level bars like that, volume declining with strength in the background, shows lack of selling. But here is lack of selling pressure here on these three bars. The volume is declining. The market doesn't fall on this declining volume and the next bar is up. Very, very strong sign of strength because you've got this right here in the background. Widespread down on very high volume. Here we have the trade that I took at the New York Traders Expo Challenge. So here we've got a nice, but there was a lot of strength in the background here. We had a nice sign of strength here and here and here, but there was no trade for me here. I had to wait. The trading challenge had just started and we churned. We tried to go up here on a bit of no demand, but the market continued to go up. And we took out the old highs and then we came back down. And these two bars here, okay, were very, very attractive for a long trade, as I'm going to show you shortly. So we had strength in the background. That's the first thing. Now we have got a no supply test bar after a test in a rising market. So they tested it twice. And I basically, as I came in, I'd put a buy order above here because I knew there was strength. Market came off again. I put my buy order here. And then I was pushed in, as you'll see. I said I was going in. As this market came up through here, I was pushed into the trade. Now, that was, as you saw that happening, okay, and this is Chicago time. I was actually in New York at the time. I had a bout of supply hit the market, okay, which is just up here, okay, and the market came off, but it came off on low volume. As you saw, Philip, I took my profit and it went and carried on, broke out just as I said it would, and carried on for the rest of the afternoon, okay. There was the test in a rising market just after it. Now that, again, very, very strong sign of strength. Now, if you listen to the recording, I looked very closely at the chart of the 15-minute NASDAQ and the S&P. You'll hear me say in front of a large audience, there was over 300 people watching live, over 1,000, I think, watching on the internet. I said, I expect the market to break out. Here's the reasons why. Here's the strength in the background. Put the whole thing together. And then the trading challenge, unfortunately, finished at 10:45 New York time. So I wasn't able to show what actually happened. But this is what actually happened. This is the E-mini. I've been looking for a test of this supply here. I'd got strength in the background. Look, massive widespread down bar. Look at the volume. Next bar was up. That had not disappeared for me. I was starting to trend up, but then this supply bar comes in, and I was looking for the breakout, and there was the entry. And actually, it's a no supply bar, and the next bar, the order that I put in the afternoon was above here, and we moved all the way up to the top here. Okay, and that, I'm not going to spend a lot of time on that chart, because if you look at the Traders Challenge video, you'll hear me talk all about this. That was the actual chart that that it ended up the day up at 1094, and sure enough, it broke out. And here we can see, which will send you this, all the bars marked with what they mean, from bar A through to B, C, which was no supply, right the way through to D, which was the entry, and then fortunately we got confirmation all the way as the market moved sideways. They kept testing, and then the trade guided trending system had stayed green, and we broke out to the upside. That was a very strong, high probability trade. And again, Tom does say that when you see these principles, if you know what you're talking about, you've got no problem explaining it to people as we do here. Okay, so going long after you see no supply or a test in a rising market. When you see no supply with climactic action in the background, this indicates higher prices. So enter a buy order above the high as we've suggested, or a no supply. So in summary, before you go long, is the market in the early stages of an uptrend or is it still in a downtrend? Is the market rising with no professional support? Is the high of each bar higher than the previous bar? Remember, you may allow one down bar for every two up bars for an uptrend. Are you into fresh low ground when the accumulation starts? Is there a trading range to the left? Is there lots of bad news about the particular instrument you're looking at? Is the market in an oversold area of the trend channel? Is there a buying climax in the background? Are you entering on an up bar? Remember, strength appears on down bars. That's very, very important.